Hello and welcome to everyone to the HyperNest Podcast. During this chat, we cover topic related to DeFi, of course, and we have an audience of DeFi builders, enthusiasts, and also some degen. Today, I have the great pleasure of being in this chat with Adli, and we're going to, of course, discuss about usual money that is revolutionizing or more precisely, already revolutionized the space of stablecoin, challenging the design of big stablecoin like Tether and Circle, and with a system of incentives that mostly focus on the users. So we distribute the real yield to the users, we distribute the majority of the token to the users. It's just a community-owned bank. Let's make BlackRock together to repeat what it is in their website. And for us, it's extremely exciting because we are very much aligned, HyperNest, with this ethos and with this dream. But before I continue, I would like to give the possibility to Adli to introduce himself and tell us a little bit more of how he got into usual.
So, long story, because I'm in crypto since 12 years now, in 2013. I discovered Bitcoin 2 years before, but didn't pay attention to Bitcoin. And in 2013, I paid attention because I saw some article about tax in Germany that take Bitcoin as a foreign currencies. And so, since there was a lot of stuff, I was student for 4 or 5 years. I make like non-profit activities, building an information website, news website, also a non-profit organization, co-hosting also meal about crypto, writing books and stuff like that. And since now 8 years, I work in crypto full time, advising. I had a consulting firm also. I go through different ventures, and since 2-3 years, we started envisioning usual with Pierre, my co-founder, at the beginning, and we started working on. The main point was simple. On my side, I missed the stablecoin stuff in certain way because I was maybe too cypherpunk, etc., and was like, what the interest of having fiat money in the crypto world? We try to avoid fiat, etc. But clearly there was a booming of the stablecoin space because it's useful to have fiat-denominated tokens in the ecosystem, and that's where we speak with Pierre about the rate that was going up and the mountain of cash that fiat-backed stablecoin issuer will make on the user in certain way, because without users they don't have any revenue. It's like a fund that take 100% of the performance fees.
Yep.
And our goal was like, okay, we think it's the most efficient model. Clearly, Tether and Circle are the most efficient compared to Maker, Liquidity, whatever, Decentralized, with a crypto asset backed, or I would say crypto native asset backed, but we see with Maker that finally there is a USDC real world asset in it, etc. And it's CDP model. We think CDP model is not the best to scale, and that's why we try to replicate what is the Tether or Circle or whatever centralized issuer infrastructure in a decentralized way. So that was the main challenge, and that's what we love with Pierre at the beginning, and even now, to fight for this opportunity cost for the user, to give their yield to Tether shareholder or Circle shareholder instead of just having the shares. In our case, it's token, and it's like the protocol equity in certain way. And so our goal since the beginning was just to redistribute and make something fair and more neutral also, because everybody forget the neutrality. Tether right now is pretty neutral, but is close to Salvador, is close to Bitfinex. They have some interest that could make them make a move that will be misaligned one day. We cannot know. Same for Circle, that are closed from Coinbase, etc. There is it was the same with FDUSD that is closed from Binance, and having the fiat currencies on chain is something that must remain very neutral because it's a basic usage. And our goal with usual and the dream at the end will be to have many different exchange, many different players of the ecosystem, having some usual token and govern together a stablecoin infrastructure and synthetic issuers because that's more universally what usual do. And yeah, that's mainly it.
That's very inspiring. I really love the vision and I really love the idea to give something back to the user, right? Tether became one of the most profitable company in the world, but it also means that everyone holding Tether, as you said, is participating in a hedge fund that doesn't redistribute anything, right? Or
Yeah.
in a fund
And
that-
we're in crypto, so it's pretty paradoxal. You know, we escape bank and create new bank that are stablecoin issuers, centralized stablecoin issuers that follow the same stuff of bank.
Yeah.
They are more capitalized than banks. That's good stuff. Like a stablecoin has more collateral than a dollar in bank. That's the
Absolutely.
funny stuff. But they behave like bank in the sense they take interest on the user back, and it's not a technical problem. Clearly, it's only a choice and a decision. So that's why we try to build that alternative that could allow people to have a share of those stablecoin issuer. And all the tokenomics has been built to be able to really decentralize the protocol and to have people that use the stablecoin on long run having a governance token.
Yeah, fantastic. Apart from what we've already discussed, it's already a lot, right? So the neutrality, the idea of redistributing yield, the idea of redistributing power with a very distributed governance that you have. Is there any other major difference between you guys and
in terms of collateral, we have kind of the same collateral. The difference is that it's on-chain, so you can look at what back your stablecoin in real time. It's not yet real time for knowing all the holdings of the tokenized fund, money market fund. But you can see that it's regulated. You can see what are the mandate, etc. And that is a difference because for centralized it could be not so transparent, I would say. Other difference is that the infrastructure is decentralized, but I talk about, and I would say the universal aspect because as I say, we try to build an alternative for this stablecoin business, but from the beginning we have a vision, and that's why we say let's be BlackRock together, because we think that we can apply that to any productive asset by making it in common and share the equity of this common protocol. That's why we released today E0. There will be other synthetic in the future, but the goal clearly is to build one giant deposit protocol in certain way where you have a liquid deposit. I cannot speak about bank. You say that it's a bank, but I cannot speak about bank. But that what is provided in certain way is kind of similar to what a bank provide on the long run, because with the USL we also make fixed rate loans. You have saving in certain way with USD0++ or with Vault, and you have a simple deposit with a USD0, and all that fully transparent, fully on chain. And the goal will be to expand the stablecoin and integration to be able to have that stablecoin usage. But the problem here is the size, and we need to get bigger, we think, before being able to really spread the stablecoin usage of like payment and trading counterpart. And that's the most difficult in this business, is to reach this critical size. And I think since Tether and Circle and Luna that fail, nobody has reached this critical size. And that's why we focus on DeFi and more on productive product right now, because we think that what can attract capital to be sufficiently big enough to capture other share of market of stablecoin on the transaction side and the counterparty side.
I see your point. It's like, if you want a decentralized bank, but we don't have a fractionalized reserve, right? So we don't use this type of game there. Okay, I love that.
And that is fully transparent and governed by people that put money in the bank, certainly.
Yeah, and we're going to have an audit before 10 years, right? So because with other issuers, we waited for a long time. But any reference is completely random. I'm not finger pointing at anyone. All right, fantastic. Maybe we can just briefly, because probably our audience already are kind of familiar with how the usual ecosystem works. Maybe we can briefly touch on USD 0, USD 0++, usual and usual X, in particular after the switch of the revenue switch.
So right now there is, so as you say, the two synthetics token. So there is a USD 0 that is our stablecoin, and USD 0++ that is a stake version of this stablecoin for 4 years, fully liquid, but locked from the primary market for 4 years. And that's why it's trading around 1 at the moment, not 1 again, but it's depending on how the market price it, probably comparing the current yield of the DeFi and the yield of USD 0++. And yeah, the goal with that was to be able to give token only if there is long-term revenue in front, and not be like killed by mercenary capital. Like a lot of projects, if you look like the past year's project, most of them has just attract TVL and then it's TVL done only. And this is the difficulty of crypto is to keep the capital. That's why we have made this, and we want to improve the mechanism and also to release some more flexible product where you can get in, get out. We have also worked on Vault, where people that have USD 0++ can in certain way reallocate their collateral. So instead of having money market fund, they can have a more productive strategy, but they don't share the risk with all the USD 0++, but only them. That's something we want to continue to work on. So that I would say synthetics part, and after there is a governance token. The governance token is a usual. This usual you can stake it into usual X, and when it's a usual X, you start earning 10% proportionally of the new emission of the token protocol and revenue from the collateral that are distributed weekly. And you can vote also with the usual X. And we want to provide also advantages and like less redemption fees, for example, less performance fees on the vault, that kind of stuff. Start having like an ecosystem logic with usual tokens that allow most loyal users to benefit from some advantages of the protocol. And today we also release. Yesterday we have released, but it was a very small cap, and today it will be raised. We release E0 that will be productive, like USD 0++, but without any lock, fully flexible, and we do that for a bootstrap period of maybe few weeks, months, and after we'll release a lock version or plus version of this, where people will be able to opt in if they want to continue to receive reward. And yeah, the goal here is to show that what we can build is like this decentralized fund in certain way, where people can put together their means to be more powerful and to create something bigger, because the value of usual is theoretically tied to revenue, and so when the TVL grow, the token price should grow also. And so if everybody finds that there is an opportunity cost to let the yield to private company, will be able to capture more value, the protocol will be able to capture more value, and so it's a synergetic relationship to grow the protocol. So yeah.
That's fantastic. Thanks a lot for the run through. Let's unpack maybe one by one all the components of these. So first of all, we have been talking about USD 0++, and at this point in time, it has a maturity of 4 years. It works almost like a bond. Is that correct?
Yeah.
Okay.
And we'll release a new version of that probably for the E0.
Yeah.
Yeah.
But it's possible to have, I think, a faster redemption if we burn some usual token. Is that something it's already
exactly.
implemented? Okay.
But we think that was not the perfect way of designing this model because currently it's not pegged. When it's not pegged, the TVL don't grow, and so we need to find something better, and we work on it, and it should be released when E0 bootstrap period finish in few weeks, months.
I see. So your objective will be to bring it back to peg, or it's okay that it's floating?
No. We still want to bring it back to peg. That's why we'll have the vault. New features also we work on. It's just a matter of finding the right balance. Since the beginning, I think that nobody can say that we don't try new things, at least as usual. And we try some mechanics, and we try to figure out the best tokenomic design and game theory design.
Yeah.
So we also know that we have to make the protocol evolve in the better shape it can. And yeah, on USD 0++, the goal is to reach the peg again. We think that the mix of having the end of airdrop vesting, because people are still claiming the airdrop. It's the last month of June, and at the same time having the token price that is a little bit low, and having a very interesting rate because the crypto market is booming a little bit again, made a mix that make it downtrend a little bit. But if you look at the past weeks, it was really pretty uptrend to the peg. We think that it's more a question of time. And we'll continue to ship interesting product so people can have interest to buy USD 0++. And we want to try to couple it to another version of token also that will be fully flexible, and having both that have a positive feedback loop relationship.
Nice, very cool. I also loved what you mentioned like 5 minutes ago. So essentially the vault. So if I have exposure to USD 0++, now I can do a little bit of double dipping. If the yield is good with that product or with other product, or I can potentially use my USD 0 to get both, right? I can still get usual, but on top of that, I can also get more
yield of basis trading strategy or whatever. We try to find the best opportunity and design vault to let people farm it. And we will have normally in the next weeks, it's a matter of prioritization. We want to have a vault with always the best opportunity where the user can set and forget in certain way.
Oh, I see what you mean. So essentially a little bit an automatic vault where I put it there and you help me to update my exposure according to what is producing a better yield.
Exactly.
That's amazing. Very, very cool. All right, let's go on a little bit on the usual token that we touched briefly. So I read, in many places that more than 90% is distributed to the community. Is that true? That's fantastic. It's very revolutionary.
Yeah, we really try to have something fair. To be honest, we think that it does not pay a lot because in certain way people were hungry in January, etc. And we have tried to build the most fair model and a model that redistributes the most to the user. And it's not something that is really like put in front by people, like saying, okay, they are not, they really want to do things well, there is 90% for the community. And yes, since the beginning, we have done that for two reasons. Economical reason, because we think that to have having the better yield possible for the protocol is the best way of capture the more TVL we can.
Yep.
And so having a small portion for investor, team, etc. Is also a way to give more in terms of yield to others. And yeah, we think that also all the vesting mechanics and stuff like that are not great right now, and sometimes kill the crypto market and try to figure out how to make something better, and that's why we have done that. And for the sake of decentralization, because the goal of the usual is to have a decentralized issuer, and so the more decentralized it is, the better it is, and for the resilience of the protocol and the neutrality of the protocol. That's why we think that the model should give the most to people that use synthetics, and yeah, there is a like an important logic of having something where we also have automatic stream of rewards that can maintain the whole ecosystem, like for liquidity, but why not in the future other stream like I don't know, acquisition, referral or whatever. And the logic was to have a big amount possibly of token that could be redistributed to also establish those automatic stream in the future. It could be cashback if one day we go more on the payment area, etc., etc. So yeah, that was the main idea, is to be able to have something that is really autonomous thanks to distribution stream of token.
I understand. So essentially the vision is, that's why there are so many tokens for the community, to have a distributed incentive system that can actually help people.
Yeah.
You know,
and to have all that based on the revenue that is that they will get on the long run. So we really design the model to only give token if there is revenue in front.
Exactly. So actually this was my next point. I think that it's super interesting the way how you manage issuance of usual token, because it's not like minted out of thin air and distributed to the world because it was meant to be, right? But you have a specific way of distributing token, of minting token, also decreasing this minting system over time, a little bit an echo of halving somehow. Do you want to tell us a little bit more about that?
It's in certain way it's related to the amount of reserves the protocol has and the amount of revenues that are generated. And so the logic is to have something correlated between normally the revenue and the price should be correlated. So the goal was to have something that should be equal, whatever the TVL grow, if the people price the revenue, because people receive less token, but normally the token worth more. And so to have something that evolve on the long run with an appreciation, the more people value future return, and so have a better speculation premium that will make the protocol worth more, and so the yield also being better. Right now we have a pretty low valuation comparing the revenue, and this is how market works. We cannot have influence on the market, but in terms of design rationale, it was the rationale to create scarcity by increasing of the TVL and the revenue. So if the TVL is bigger, there is less and less usual per dollar that are distributed, and with that we achieve to have something where there is less per dollar, but theoretically the value increase, and so you have something at the end that is even, and the more there is trust and premium speculation premium, the more the yield getting higher.
That's very, very clever, and I really love the way how this is structured. Going to the revenue, you have been already since there was the revenues which you already distributed a bunch of money.
Yeah.
And also I think currently the current
Near
APY.
6 million, I think 6 or 7 million.
Yeah, that's what I was checking. Yeah. Plus also the APY is pretty wild, or still, right? So
Yeah,
40-50% APY still. I
yeah,
was
in
talking
cash.
June Analytics is pretty good.
Plus the usual yield that is also 40. So at the moment,
Okay.
yes, it's pretty interesting. It's not a financial advice, but
No
clearly
financial advice, but it's good.
we think that we have one of the token on the market that is more paying in certain way right now in terms of ratio comparing to the price.
Yeah, yeah, absolutely. All right, all right. So going further in the last part of this, at least of your previous run through, we were going in the direction of synthetic assets, and we just launched the it zero, but there will be probably a BTC zero.
Yeah,
And
we
something
have to
more.
find the right collateral for that. It's not easy, but yeah.
Yeah, exactly. But this is my main question: is if I'm reading correctly in the documentation, the collateral of it zero is WStat.
Yeah.
Is that
Yeah,
right?
yeah.
All right. What is the rationale? Why launching a synthetic assets pegged to Ethereum?
Because we think that so there is several stuff. First, we see the usual layer as a yield booster in certain way by transforming a simple yield linked to a principal into a yield that is in equity in certain way and that capture more value than simply the principal. So we think that this could be port to any productive asset. And that's why I repeat, but let's be BlackRock together because we can create some organic fund from what people want as a yield and create on the long run a decentralized protocol that grow its treasury over time and continue to grow and also grow the deposit of the TVL and people earn more because they all share some equity stuff that has more value than just the yield that is generated. So this is why we do synthetics and the main logic. And the other stuff is about being able to be more resilient because if we have many different productive assets and synthetics, it means that there will always be something that is interesting in terms of yield. For usual, let's say, for example, the rate of the central bank are going down. It means that the money market fund will yield less, but Ethereum will still yield interestingly. And same for another asset, etc., etc. So the logic is also to be more resilient to market volatility and market variation. And the third one is about ecosystem. It's about having an ecosystem where maybe in the future you can switch USD 0 plus to some equivalent product in ETH even before the 4 years because you stay in the ecosystem. And our logic is to create some bunch of services around that where you can use in fact all those assets but in an ecosystem where you always earn a part of what you use and that's the final goal. And for usualix it will be very interesting because at the end we think that holding usual will be like receiving some USD, some BTC, some ETH, and so you will be able to grow passively a crypto portfolio just by holding usual token.
That's very interesting. It's creating essentially a comprehensive system of products where essentially you go to usual, you can have exposure to Ethereum, to Bitcoin, you need a stablecoin, you get real yield. Essentially, it's the BlackRock, decentralized BlackRock that we were discussing before. I get it. Okay, but how in terms of really process? So I potentially put a WStat. I lock a WStat, I can mint, I guess, it's zero.
Yeah, sorry, about the WST's collateral specifically, why this one is about simply the security and reputation of Lido that is now more than 20 billion, etc. For a first one, that was great. We are working on a solution that will be maybe a little bit better in terms of yield, in terms of control and infrastructure. So this should be appear soon, and we could also in the future build some vault where people can reallocate their collateral to maybe some collateral that yield more than like ETFi or stuff like that. But at the moment we wanted to have something very vanilla, very secure. The base layer, we will always try to have the more secure base layer we can, and after letting the user choose other risk if you want. So yeah, that's mainly how we why we have chosen that collateral. And for BTC0, that currently the problem, through finding the good collateral, a good productive collateral for Bitcoin.
Oh yeah, because you should have a collateral is also yielding something, and getting yield
Yeah.
in the Bitcoin world is not very simple, right? You need to go through Babylon, and then you have not a lot of alternatives. Yeah, I know your
Exactly.
your consideration. I'm also studying that. Okay. Very cool. But basically, when the yield of WSTET will essentially, when I get it 0, and in the future it 0 plus plus, right? I'm gonna get usual token, correct? As a reward. That theoretically is gonna be higher than the yield of WSTET.
Yeah, exactly.
But holding but if I get my usual and I stake my usual at some point, am I going to receive directly Ethereum? Because I think it.
Yeah, that's what we say not yet,
But
because right now it's a bootstrap, and it's more logical to distribute when there is like lock of the revenue in front. So we will have a small period where there is no distribution, like with USD, and after the distribution will be activated. And we are also working on a more global framework on distribution to find a good balance between maybe some buyback, some distribution, some reserve, and all those who will go through governance, because we really think that distribution is good. We think that it's a more rational logic and good for people, but we see that currently it doesn't have an effect on the price, because as you say, it's 45% of return, and it's not arb to 10% or 20% or 5%. So we want to see if there is not a more efficient way of having a price that will be a little bit higher, and so yield also that is higher. Because currently the fact of distributing revenue is not what make a crypto to have that price or that price.
That's you're completely right. There might be other method, or it might be just a moment of market inefficiency, right? So the market is very often inefficient in the crypto world in particular, right? So people have scattered attention. There is someone screaming with a louder voice at some point, and the other one like, okay, yeah, why is not happening? But yeah, of course, it's interesting to also to try other things and see, if we move the needle. Something that I've been extremely fascinated about is the stability, all the stability mechanism that you have, or more precisely, the system to maintain the peg. So I was like, okay, these guys, they really try to think about everything. So do you want to tell us a little bit more about these several mechanisms that you have in place to make sure that we keep a good peg?
Yeah, so first mechanism is that the minting and redemption is open. So everybody can mint and redeem. So any actor in the market can arb if there is a discrepancy or profit somewhere. Second stuff that we have always put in place was to not allowing new mint if the secondary market was depeg. So not at the smart contract level, but on the front level. And so when you come to usual, we will automatically redirect it to the secondary market if it's more interesting, because it's depeg than the primary market. And the final stuff is more about, but we have ideas we work on, maybe some buffer logic to bring more stability, either directly in the collateral, but clearly the stability thanks to the instantaneity of the mint and redemption process to make arb efficient. If you have that and you have actors in the market that want to profit from your arbitrage, it works.
I see your point. Okay, now let's maybe zoom out a little bit and look into, the several players in this market. We touched a little bit on Tether and Circle, of course, that are the big guy, let's say, the one that they have an incredible market cap, but on the other hand, they keep everything for them. And as you say, also neutrality. One close to Coinbase, the other one with Bitfinex. Well, basically it's the same team at Bitfinex, right? Or at least it was. And then there are a lot of new contender, but no one have their size, right? Probably the biggest two stablecoin giving back some yield are probably Ethena and the USDS, I guess. That would be my guess at this point, right?
Maker and Ethena,
Yeah, Maker and Ethena basically with, probably a few less than probably 10 billion, 4 or 5 billion in basically market cap, something like that. How do you see also usual comparing with these other guys that are also redistributing yield? Of course, we already touched on probably one of the most important infrastructure part, CDP versus not CDP. So of course the
versus tokenized fund,
yeah,
like tokenized basis trading fund like Ethena, and
Yeah.
more even discretionary fund because they sometimes goes to T-bills if the basis trading yield is not interesting.
Yeah, both, I guess.
Yeah, I think, as I say, we really try to not reinvent the wheel by taking the model that is the most efficient for us, having reserve in T-bill and repo to issue dollar, like the Tether and Circle does. So we are not really, for us, on the same area because they are more... For Maker, it's basically a lending borrowing market indirectly in a certain way. And for Ethena, it's a share of a fund, of a delta neutral fund,
Yeah.
So it's a different logic. On their governance token, it's not the same stuff. For Maker, you have some burn. With Sky, I don't remember what they plan to do to accrue the value into Sky. It can redistribute a small part to INA, but the main part is redistributed to the users, the yield to the users at all the dollars. So I think that both products are cool and great, and had for Maker big traction because of the first mover advantage, I would say. For Ethena, because it was the right time at the right moment, and also because they execute pretty well. I don't know in terms of future, because for me, the stablecoin ecosystem will be fiat backed if it's a fiat stablecoin, because of all what we said, and the complexity is to keep growing into an ecosystem where there is two giants. There will be a lot of competitors that will come, maybe from Stripe, maybe from JP Morgan, maybe from whatever actors. And we saw that even PayPal has difficulties to expand the usage of their stablecoin.
Yeah.
So we really think that I think we are aligned with the Maker Ethena strategy of first starting to grow in DeFi and to grow on the yield side. But we have different strategy to achieve it, I think, and different design in terms of architecture of what we bring as a stablecoin.
Yep. And for me, this is, and I want to ask you that, right? For me, this is this is very logical, right? Because Tether also had the first mover advantage, and the USDC and Circle, with also the relationship with Coinbase, there were a lot of going also in the right direction, and in a way they became, the ultra giant in the game. However, from a pure financial perspective, if there is a stablecoin that it's stable, but they give me also the possibility to get part of the yield back, get some money back. It's like, almost having exposure to a bank account where you don't get anything, and a bank account where you get, some yield. I mean, there should be, in my opinion, a turning point where the stablecoin and produce yield they will start to eat, and there was actually this trend. The stablecoin, the redistribute yield should start to eat a part of the market share, right? If the financial world is kind of logical, So my question for you is what are the main factors that are not accelerating at least this change? So essentially stablecoin redistributing yield, accelerating and eating market share.
Distribution channel. Distribution channel. The distribution channel is the exchange. And exchange at the moment don't want to necessarily change. All the app, fintech app, all that kind of stuff. It's about integration,
Yeah.
And nobody want to reintegrate thousands of pairs with USDT.
Of course.
Thousands of integration with custodian, thousands of integration with wallets, thousands of integration with all the ecosystem of actors you need for a stablecoin. That's why you need to reach a critical size to have to be able to, I would say, pay for distribution, because that's the most complicated part to be well distributed. When you are distributed after, I would not say it's easy, but it's like acquisition for normal banking or financial services.
Yeah.
But if you're not distributed, and for example, USD0 is not on any exchange right now, big exchange, so it's complicated to use for for on ramp off ramp for trading or stuff like that. You can use it more for yield, and that's why we think that all those ecosystem of partners, market makers, exchange, wallet, etc., are really difficult to convince, because even if maybe they lose some money by not having a productive collateral where they take a cut or stuff like that, they will achieve it in other way without changing the habits of the user. And having the user requested something like that is meaning having the user knowing that he has an opportunity cost and want to use your stablecoin instead. And that is the difficult part, is to touch all the users that every day use on a daily basis USDT, USDC, saying you are letting a lot of money to those people that you should have. So I think it's a little bit the bottleneck here to achieve having this all these ecosystem gates that are important for a stablecoin, and having people understand that there is an opportunity cost right now of using USDC and USD. And even me, I hold some USDT, on hold on some exchanges if I use a centralized exchange, and I will not yield on it, and maybe let 30 days or even several months in a dumb way, just because of the usage, the ease of the usage.
Okay, you can still LP, right? So if you feel like. So there's still you can still provide some USDC, USDT, just in case, USDS. Okay, do you think that we'll arrive to a point, which I hope, that the distribution of one stablecoin providing yield, or a combination of those, right, that will become so big, so extensive, that this will force Tether, Circle, or even banks to provide yield to users?
I think that both could coexist for a long time. I think that there is a world also where Tether put in his balance sheet some stable coins that yield, and keep the yield, and keep the brand and the distribution channel, but use themselves stable coins that yield in DeFi. There is also a world where they have to redistribute because of the demand, but I don't saw that scenario too much. I think they could do that maybe if they want, but it will be strange because it's like I think the best business in the world right now they have. Circle is already giving back on some contract they have with Coinbase, etc. And it's public. I don't speak about anything private, but they have deals that redistribute. So I think it will be complicated. Anything, and you have all the stuff like BlackRock, etc. that issue directly market fund shares on DeFi. So no, I think dollar could stay dollars that are not productive, and people may continue to use dollars that are not productive. So the fight is more on the usage and UX and the yield, but for those who search yield. And even if Tether is really big, it's not so big compared to the whole world. Of savings in dollars, and already with savings you can get a lot of trivial interaction. And after, if people save in that currency, it's easy to make them pay in that currency on the second part.
Yeah. Although they are like, I think at least in the top 5 or top 10 for holders of treasury bills, American treasury bills in the world, right? Together with Japan, with China.
Because there are more collaterals than the bank.
Yeah, that's super interesting, this part. But also one of the thoughts that I had this day, I was like, how is it possible that after the gold standard, USD is backed by, I don't know, right? We don't, it's an open question. But
sorry, there was a little bug I didn't hear.
So basically, after the end of the gold standard for the dollars, so the USD is backed by an economy. Let's call it an economy, right? Something like that. But all stablecoin pegged to the USD dollar tend to be backed by something, by treasury bills, by reverse repo, and so on and so forth. Is this not very interesting? I mean, to say the least.
For me, it's something very interesting because it will be. It's interesting for Tether, etc. But it will be even more interesting if we achieve it in a decentralized way.
Oh yeah, for sure.
Because, for example, let's say that one of the biggest debt owner of the US is a decentralized organization. Would be something, in certain way for me, and will give back some control over the fiat in a certain way, like having a real semi-decentralized fiat. That's what we try to achieve in certain way with usual. To get back some power on the fiat. It's not a tool where we have power, but we may have more power, at least having the yield of this fiat instead of giving to private bankers, to whatever people, and having power on the governance structure we want for transfer and stuff like that. And at the end, maybe even being one of the big debt owner of the US and being able to having some relationship in a form, I don't know, but that's something that clearly could be interesting.
It would be super interesting. I hope that I think it's called the Genius Act or something, that they will not ban stablecoin redistributing yield, right? Because
at the moment it's pretty positive, all the news.
Okay. All right. What's your vision then? So we've been discussing about possible trends in comparison between usual money and the other issuers. How do you see the stablecoin panorama evolve in the next 5 to 10 years?
I think it will become bigger and bigger, maybe 10x, 100x. It will be something big. I think that bank, etc., will start entering the dance in less than 2 years, in a like big way, by buying some crypto companies, or by investing in some crypto protocol, or by making their own infrastructure. I think also that there will be a big sort into the DeFi in the next years. with a lot of protocols that will die on many different usage. And so we may see more and more merger, I think, between protocols to be more complete and to have a better services. And I think the next war is on UX, as I say, and this is a war that just started. You see, it's an example, but the Coinbase ads right now are at the level of a normal company, and Coinbase has made IPO and it's listed. It's normal, but clearly we see that the crypto starting to be more and more casual, and I think that it will be the same for stablecoin, and maybe asset-backed loan and stuff like that also will be a great way of using stablecoin. So I think it's a simple, better form of like Bitcoin has created one of the best form of digital ownership, and stablecoin are great because of that interesting form of digital ownership that make everything more efficient, easy, and costless. And so we're only at the beginning. I think the transaction costs will disappear with the years past, and the fight will be on the yield generated by the collateral or stuff like that, but not on the transfer, because you see there is more and more high frequency blockchain, or you have Lightning Network on Bitcoin. It's more a matter of usage and UX that is not great right now, but I think all the gas costs will totally disappear. And it's more really the service, the ecosystem, and the infrastructure you have, and the yield that will make protocols that survive or not. And that's why in the beginning we try to be revenue focused, and having some proportionality between the tokens and the revenue, because we really think that the long-term fight is on having a good rationale on profitability, because the profitability will not be volume-based and usage-based, I think, on the long run, because the cost will be totally abstract. And so it will be other way of being profitable through the collateral, through the product offering you have, other than just sending A to B, because really it's just a matter of abstract the difficulty of crypto, but after it will be very simple.
Absolutely. I completely agree with you. If there is something I would bet on, it would be the increase in Bitcoin global market cap. I would say this is all. It's an obvious bet. I don't know how to do that, but I think it would be great. And in addition to that, it's going to be the same as Wi-Fi, right? So very fast, very cheap. There will be no layers that will come to you one more time and say, "Oh, we are very fast." I say, "Okay, well, everyone is fast. How fast do you need to be in order to be okay?" Okay, and for builders that want to collaborate with Usual, or anyone that want to get in touch with Usual, what's the best way, and how would you like builders, other protocols to integrate together with you guys?
At the moment, we have a company that is a lab developing Usual. We are always open to anybody that reach on Discord, on mail, on Telegram, whatever. So we have a lot of feedback from the community on Discord. We are open to any collaboration if it fits the timeline and agenda. And we'll try to more and more organize, I would say, that decentralized development, because right now it's mostly on the lab, clearly, and the goal is to have maybe external contributors on maybe specific topic, or also making another team. Maybe also the goal is really to find a way to have a true decentralization also in the maintaining and upgrading of the protocol. But right now there is no specific process. You can reach us on Discord and on different social network, and generally we'll answer in a few.
Okay, I got it. So your vision would be that more team would work on the creation of different vertical maybe, or appendix of new structure within Usual on the first side. Okay, that's very interesting. And people that want to integrate with USD0, well, it's permissionless, therefore they can just basically put it there and that's it. What type of other partnership usually do you have in mind, or would you like to have with other protocols?
No, what we try to be is, as I say, the main the fight is on the distribution channel. So the more distribution channels, the better it is. The more integration we have, the better it is. We have some subtlety because if with USD 0++, we have to track the position to track the reward that needs to be given to one specific holders, etc. So this is a small work. So for USD 0++ integration with the reward, we have to do some work, so it's not automatic. But on all the rest of usual, on the remaining, it's fully automatic.
All right. So we're going to the end of this fantastic chat. It has been fantastic discussing with you and learning more about usual in your perspective in general about, of course, the magical Web3 world and stablecoin. Is there anything that you want to say before we close?
What I can say, like,
or to get in touch with
do your own research, value with the revenue. No, I will say that I think that we are at a very interesting moment where the real usage start to emerge and will take a totally different scale. And so that's a really great moment to work in crypto, on crypto, I think, and to find way to build better services, more fair services, and not forget why crypto exists. And so to continue to try to build decentralized stuff that redistribute power and value and make a resilient system and neutral system. So yeah, I think that we need to not forget the fundamental and to create real value, and that's what we try to do.
I love that. It was one of the best closing I heard. It's also completely aligned with the philosophy of HyperNest. Actually, if you're building something, follow this philosophy. So if you want to really give back to the users, distributed power, also get in touch with us. We're going to help you to get funding and to accelerate, of course, your progress in the magical Web3 world. Thanks to everyone that is listening to our podcast right now. And thanks again to Adli.
Thank you.
It's been fantastic. Fantastic speaker together with us. Have a beautiful day. Thanks a lot. Bye-bye.